Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwal, along with me, Shell D'Souza as well. Shell, a very good afternoon to you as well. But market's not that good of an afternoon. 21,400 and below those levels now.
Absolutely. If you look at the markets, weak moves coming in for the markets as a whole. Remember that we started pretty firmly in trade. We saw gains of about 8-10% or so on the Nifty. From there on, we've only seen one way, and that is one way down. You can see the markets now down about a percent.
Colgate, that's been in focus. At one point of time, was trading in the green comfortably after the company had reported a good set of numbers. But with the markets given up its gains, we're seeing that Colgate also is giving up its gains. It was also at an all-time high level in the morning. But yes, in terms of numbers, there were the company saw a robust margin performance coming in, and this is despite the ramp up in their ad spends. The core as well as the premium segment for the company both had seen a very good growth. Toothpaste business also posted a double-digit growth in sales, and when you compare it versus HUL, which reported its numbers, and oral care segment of that saw revenue growth of mid-single digit. Now, talking about the brokerage notes, CLSA is hiked the target price for the company as well. They've given the new target price also. And yes, other than that, they're maintaining their sell rating. They're saying that the volume growth was subdued, but the margin showed a very significant improvement. Opportunity is there to induce volume growth going forward as well. And there's obviously the per capita usage that comes in also in India versus other countries is still low. So a lot of penetration possibility that is there still for the segment. And that is why, yes, they have hiked the target price, maintaining the sell rating. But that's the word coming in on Colgate right now.
All right, that is Colgate for you, reacting to its numbers. Let's talk about Petronet LNG, and this one, no, it's not reacting on its numbers. If you look at Petronet LNG, it is trading higher by about 5% odd. So you have news reports indicating that Qatar Energy could sign deal with Indian buyers, including the PSU company, that is Petronet LNG, for cheaper long-term LNG supply by at least January end. This is what the wire agencies actually reported, attributing this development to sources. The deal also allows Indian buyers to decide which terminal in India will receive the cargoes, thereby reducing the pipeline transportation costs. And on back of this, if you see, the stock at one point in time saw an uptick of as much as 7.9%, hitting the highest level since September 2019 when it hit a record high. This after they had a deal with the US-based Tellurian for LNG purchases. From there on, it's given up some of the gains, nevertheless 5.4% on the source-based development, which will be extremely positive for Petronet LNG.
Let's move on and talk about a stock on the technical front then, and that is Zydus Life, Dhwani. This one is seeing a very sharp up move today. So on the charts, what is the indication now for Zydus Life?
Given the scenario of the market, we are moving towards the defensive now. Pharma pack is definitely moving on the higher side. Zydus Life looks interesting over here from the current level, for the reason being in the past few sessions, like since the start of January, we've been seeing a consolidated zone into this particular counter. But in today's session, we are seeing a breakout of that zone from the current levels. One can buy into this particular counter from the current levels for a target on the higher side of 770. It's a positional bet over here right now, and the stop loss that one needs to ideally maintain over here is on the low side at 705. It's also an open low formation today, so 705 should act out as a good support level here.
All right, so that's the take coming in from Dhwani when it comes to Zydus Life. Actually, let's talk about Zee Entertainment. I think that's the only stock that has been talked about since morning. But now it's actually slipped even further from those levels. It also saw a block deal actually take place today.
Well, yeah, Cheryl, Zee Entertainment in focus today. Keep in mind that after more than 2 years of deliberation, Sony has terminated its merger cooperation agreement, that is the MCA with Zee. They've sought a termination fee of almost $90 million USD from the company for an alleged breach of the MCA. In fact, Zee had said that it would evaluate all its options, including a legal action. And let's also look at what some of the brokerages were actually saying. We have 6 downgrades that have come for Zee Entertainment so far after the termination with its merger with Sony. We have Citi, Axis Capital, Dollar Capital, CLSA, as well as Elara Capital downgrading the rating of this counter from buy to sell. We also have Nuvama downgrading its rating from buy to reduce. Apart from that, let's also look at the consensus target price. Currently, it stands at 274, which is a sharp downtick as compared to the previous consensus target price for almost 322 rupees per share. So definitely negative news flow for Zee Entertainment, and that is the reason why the stock is down and out in trade. As of now, the stock has dipped to as much as 27%.
Absolutely, that is Zee for you all. But let's move on and talk about Adani Ports. Dhwani, this one had seen a very sharp run up in the last 6 months, 56% return. But in the last 5 days, seems like a bit of a different story. So is it time to actually start booking your profits?
Yes, exactly. That's what it is. It's time to book your profits in Adani Ports. The stock is seeing a halt over here. On the higher side, 1200 to 1220 is the region where we are seeing a constant supply coming in on the Adani port over here. And in today's session, we've seen a breakdown also in this particular counter. It's really time to book in your profits over here, because on the lower side, the stock can slip in over here at 1030 rates back again.
All right, so that is Adani Ports for you. Ankita, let's come and let's talk about the realty space, because that one also is in focus, Oberoi Realty in particular. Why is that?
Well, it is in focus on the back of its Q3 results, which definitely did not please the street. The stock is knocked down 9% in trade today. Based on the fact that they saw a 49% decline on a year-on-year basis in the net profit, and the net profit came in at 360 crores for the quarter, down from 702 crores on a year-on-year basis, impacted by weak top line and operating numbers. Now, revenue from operations also fell by a good 35% on a year-on-year basis to 1,054 crores during the quarter. Morgan Stanley has retained their underweight call on the counter with a target price of 1,180 rupees per share. But the international brokerage noted that the pre-sales revenue and margins have come in below the expectations for the quarter. The company's pre-sales grew by 25% on a year-on-year basis, but declined 18% on a sequential basis to 7.9 billion rupees in Q3 FY24, and this was 51% below what Motilal Oswal was expecting. Now, as a result of lower than expected pre-sales, Morgan Stanley said that Oberoi Realty could underperform its peers, and on the back of that news flow, we see that the stock down and out 9% in trade.
Okay. That's the word coming in on Oberoi Realty. But on that note, we're going to slip into a very short break. But as we go into break, N.S. Murthy is a government and public service consulting leader for Deloitte India and shares what she expects from the budget this year. Listen in.
From a personal taxation standpoint, not much change is expected. However, we could expect amendments towards simplification of tax, ease of compliance, and a review of Chapter 6A. As regards simplification of taxes, additional steps to make the new tax regime more attractive, with further widening of the slabs and reduction of some of the tax rates, could be on the cards. A clear and concise capital gains tax regime to boost the capital markets is expected as well. Our capital gains regime is complex, dependent on period of holding, residential status, nature of asset, and with ever-increasing types of products, compliance becomes extremely difficult for a layman. Review of Chapter 6A may also be on the cards on some key areas only, providing a larger cover for medical insurance. With ever-increasing medical costs, there is an expectation that the government will increase the relief under Section 80D. Removing the differentiation in treatment of interest on bank deposits, on savings deposits and fixed deposits, and bringing the thresholds of Section 80 TTA at par with Section 80 TTB is expected as well. From an ease of compliance perspective, with a growing number of individuals who are crossing borders, traveling on work, business overseas, and claiming the benefits of double taxation treaties, these should be made much more simple. For instance, a relaxation of treaty benefits and process for filing of Form 67 for foreign tax credits, and alignment for a filing of India tax return with the overseas tax return in a calendar year country is required for proper compliances. While there is judicial precedence, clarification is required in the law for treaty reliefs to be provided at the stage of tax withholding by the employer, and the relevant forms, be it Form 24Q, be it 16, should also be enabled for such claims.
Welcome back, and you're watching Market Fatafat on ET. Now let's keep it going with all the stocks that are in focus and buzzing in trade. And Dhwani, the next one you've picked out is also coming in from the pharma side, Granules. They did report their numbers a short while ago as well. inline set of numbers, but in terms of charts, what's the expectation now?
On the expectation of the number, definitely the stock did rally up in the intraday move that we are seeing over here. But what is interesting over here is that the stock is constantly taking up a support at a 200 period exponential moving average on a 30-minute chart, from where we are seeing a bounce coming in, and on the current level also one can go long into it. Anyways, defensive are in focus today, pharma is in focus today, so this one is an ideal bet over here. From the current levels one can go long with a stop loss over here coming at 410 for a target that can be changed at 440.
All right, moving on then, let's talk about VST Industries. And why is this particular counter in focus is because it is in focus on back of its earnings. If you look at the quarterly profits, that has actually dipped. On back of that, you can see the stock actually slumping in trade. It's fallen for a second consecutive session. The company reported nearly 32% drop in its profit for the quarter gone by, while the revenue from operations also slipped about 6%. So on back of the weak show coming in Q3, you can see VST Industries under pressure, 3% downtick coming for VST Industries. Not just VST Industries, we've seen the trickle-down effect even on ITC today in today's trading session.
Okay, let's move on and talk about an IT name, Dhwani, and Birlasoft. This one is very different from the other IT companies, right? In terms of a performance, it's more than doubled in the last 6 months. So in terms of charts, now do you think one should actually book out profits or continue holding this?
No, here the call comes in that you should continue holding in. In fact, the ones who have missed out over here on this opportunity can definitely go long into it again, because the derivative data over here is very interesting, where the stock is also showing a good support level on the weekly charts as well as at 745, and this level acts out as a good support level on the weekly. The dailies are also seeing a strong support level building over here on the higher side, and we are moving further up into this particular counter. The stop loss ideally one needs to maintain over here positionally is of 775, and the target over here on the higher side of 890 can be chased.
All right, let's shift focus and let's put the spotlight back again to the banking space. And Vamakshi, Karur Vysya Bank, this one focus on back of its earnings?
Well, absolutely right, Cheryl. The stock is in focus on the back of its numbers. Let me quickly take you through some of the key highlights. Net interest income saw an uptick of almost 13% on a year-on-year basis. The net interest margin has also seen an improvement and now stands at around 4.32%. PPOP, that is the pre-provisioning operating profit, however, was down nearly 2%, but nevertheless the net profit has actually managed to surge as much as 43%, standing at 411 odd crores. When we talk about the asset quality, definitely a marked improvement is what we're witnessing out here. GNPA has declined on a sequential basis from 1.73% to 1.58%. NNPA has also improved from 0.47% to 0.42% sequentially. Apart from that, we also had MK actually boost the target price for this counter from 185 rupees per share to 200 rupees per share, and they have actually maintained their buy call. So all in all, a good set of numbers is what Karur Vysya has reported this time around. We have a brokerage update coming in as well, and on the back of that, we have the stock soaring as much as 9% as of now.
Okay, let's move on and pull up some of these stocks which are involved in solar panel makings. This power names also coming in there. And obviously, we have the announcement that came in from PM Modi that said that there's a new scheme called PM Suryodaya Yojana scheme envisaged to install 1 crore rooftop solar projects. And the scheme is to bring down electricity bill and reduce the deficit as well. Now, obviously, where will we see the impact or where will we see the benefit? That is there. The policy push is to add around 30 to 50 megawatt capacity. Overall rooftop capacity currently stands at around 12 gigawatts. The residential rooftop capacity stands at 2.7, and US and China has around 40 gigawatt and 52 gigawatt rooftop solar energy that is there at around respectively. Now, India has added about 2.2 gigawatts of solar rooftop capacity in 7 months of FY24. So yes, on the back of that, we are keeping an eye out on some of these names that are involved in solar panel makings. That are, the manufacturers like PV manufacturers are Tata Motors, Adani Green, Websol, Wari. The rooftop installers are Tata Power again as well. We have Wari again involved in this as well. Our Oberoi Renewables, SW Solar are some of the names, as well as financiers like REC, IREDA. All these do come into play as well. So also listen into what IREDA's management had to say to us today. The CMD Pradeep Kumar Das spoke on the capex opportunity from this rooftop scheme. So listen in.
I can give you a rough estimate of for having 1 crore of rooftop solarization will be requiring around 1.25 lakh to 1.5 lakh crores of outlay. Out of which, if you take out the subsidy part, government support part, depending on the criteria and whether it is BPL or whether it is urban, rural, that detailing will be coming out. And I believe that around 1 lakh crores of business is going to be there. And here already REC has been notified as the nodal agency for implementing that.
All right, and the World Economic Forum 2024 at Davos culminated with a lot of energy as well as positivity, and Times Network has brought extensive coverage with exclusive interviews with the industry stalwarts. Here's another exclusive interaction with Borje Brende, who is the president at WEF, with Mihir Bhatt, who is the managing editor at Times Network, discussing India's economy and its growth prospects. So you're out.
India has been pulling a lot of weight on a global stage in terms of economic growth, and it has remained the fastest growing large economy for quite some time now, and China's growth somehow refuses to revive. What is your view on India, its growth prospects, and the increased influence and responsibility that India has on global stage?
So I'm very bullish on the Indian economy. Okay. I have to say that. More than 7%, I think, this year. And India is well positioned to continue this. It's a $3 trillion economy today, and that is not enough for a country of that size.
Correct.
So there's, of course, a lot of catch-up, but it has now a momentum that is incredible. And India has also two things going for it, of course more than two, but if I'm going to underpin two things. One thing is that digital trade is like 15% of the global economy, but it's growing twice as fast as the rest.
Yes.
And India is pretty well positioned here. Second is that services are growing also much faster than the traditional goods. Very good for India. If I should add one thing, if I may.
Yes, please.
Would be, of course, India has also benefited from the friendshoring and diversification of supply chains. If you look a few years back, there were 0 iPhones produced and manufactured in India.
Yeah.
India was never the manufacturing hub of the world. That was China and maybe Vietnam, but India was the services. But no, I heard during this meeting, I haven't really checked it, but I think it was a good source, saying no, 25% of the iPhones will now be produced in India. And that has just happened like this. So there are then nations that chooses India. And of course, India-US relationship is pretty good. And that
it's good for the world as well.
So I know it's very good. U.S. is the largest economy in the world, 25%. And then India is seen as a friend by American industry and the American administration, and that's why also you will see some more friendshoring there. So India is in a way benefiting from what has been a soaring relationship between the U.S. and China. I think there is a little bit better now after Biden and also Xi Jinping met. And of course, India is in a very difficult balancing act here too. I don't necessarily want to elaborate on that, but I think it's challenging, but it's handled well so far.